Good morning. Welcome to the Daily Trading Journal. Now, if you're new to trading, one of the biggest mistakes you can make happens in the first 10 minutes after the market opens, and it's this. You take a trade just because the market is moving. Now, today I want to walk you through this properly because this is where a lot of beginners lose money without even realizing why. First, let's set the scene. The main session I care about is when the US market opens, which is 2:30 here in the UK. And that's when the New York Stock Exchange and NASDAQ open. And that's when volume comes into the market. Volume just means more buyers and sellers are active, which creates movement. Now, when that happens, you'll see price start moving quickly on the chart. And the way that movement is shown is through candles. Now, if you're brand new, a candle represents price movement over a set period of time. Body shows where price open and close, and the lines above and below are called wicks. The wicks show how far price moved before pulling back. For example, if price pushes up and then drops back down, you'll see a wick at the top, and if price then gets pushed back up, you'll see a wick at the bottom. And here's where people get caught out. They'll see this movement and jump straight in. But movement doesn't mean opportunity. What actually matters is how that movement behaves. So let me break this down in a really simple way. After the market opens, you'll usually see one of two things. The first is clean movement, where the price moves up in a clear direction. The candles make sense. You might see price push up, pull back slightly, then continue. The wicks are controlled, not all over the place, and it feels readable. You can follow what's happening. The second is a messy movement, where this is where price is jumping up and down, candles are all overlapping, wicks are sticking out everywhere, and there's no clear direction. It's unpredictable, it's noisy. And this is where most beginners lose money because they treat both of these situations the same. They see movement, they trade it. But trading in messy conditions is basically guessing. Now, here's the shift that changed everything for me. Not trading is a decision. If the market opens and what I'm seeing is messy, unclear, or inconsistent, I do nothing. That's not a missed opportunity. That's me protecting my money. Because your job as a trader is not to be active. Your job is to be selective. Now there's another layer to this. I'm not just looking at one chart. I'm looking at a small group of stocks that I watch every single day, and I call it my trading universe. For me, that includes names like Apple, Microsoft, Tesla. And the reason I focus on a small group is because you start to recognize how they behave. You're not starting from scratch every day, you're building familiarity. And more importantly, you can read the market as a whole. And if they're all moving cleanly in a similar direction, that tells me conditions are good. If they're messy and inconsistent, that tells me to stay out. So instead of asking what I can trade, I'm asking, is this environment even worth trading? So if you want to see how I set up today, what I'm looking at today specifically, I do that on my daily trading journal, which you can find on Patreon. So I'll break down exactly what I look for before I enter a trade, how I confirm setups, and the full decision making process in real time. And if you want to see that, you can start with a 7-day free trial. Just go to patreon.com / the everyday trader. The link will be in this description. Or just search the everyday trader on Patreon, and make sure you sign up through the website, not the app, so you don't get charged any extra. I'll be back in tomorrow with another video. Till then, stay sharp, don't rush anything. I'll see you then.